Hello, this is Brian Resney, president of Resney Wealth Management. It's question and answer day. And of course, we're getting a lot of questions about the debt ceiling, imminent stock market collapse of 20-30%, the big major recession. This is the stuff that is typically spewed out by the big brokerage houses, banks, and insurance companies. You know, I've been managing money well over 30 years. One of the things that I've learned is if you don't sensationalize a story, people don't listen and they don't react. Wall Street likes to hype a lot of things. They want change and motion all the time because that allows them to make more money. If you properly manage a portfolio, if you've done your homework before you start investing and you continue to do your homework, so you have a sell discipline, a risk principle within that strategy, I think you're going to be a very happy camper. That doesn't mean you're going to get rid of all volatility, but I will say this. There are many times where you have a portfolio of quality investments, and even sometimes those quality investments will come down when the market comes down. But they don't come down as much. Even good investments will get sold off with the hysteria often that plagues the markets for short-term periods of time. Managing money for over 30 years has taught me one thing. The vast majority of investors, unfortunately, let emotions supersede a sound investment strategy. They make emotional decisions that cause havoc in the portfolio, create massive losses, significantly lower returns than what the various sectors have produced. There's a lot of studies from Delbar over 30 years about investment returns and the investor returns, and how bad your results have been, and that's because of emotions and make a knee-jerk reaction. It's amazing last year when I looked at the market that was down, let's say 18% on the S&P, yet a lot of people that we talked to on my TV and radio show were down double that or more. And why was that? Because they bought a lot of those garbage stocks or investments that raced up a lot the year before, so they chased performance, overvaluation without research, only to get hit on the head and have their portfolio drop more than double what the overall market averages did. We've had clients that hired us from last year that this happened to them. And again, they said they made a mistake. One of the things we try to educate every one of our TV and radio show listeners is if you cannot keep emotions out, if you don't have the time or discipline to manage your own money, if you're not doing research, you're going to do lousy. You're going to take more risk, have bigger losses, and have just mediocre returns, short-term and long-term. You have to accept volatility, whether it's in bonds, stocks, real estate, doesn't really matter. We see greener pastures this year, and I talked about that at the beginning of 2023. What's interesting is we just had a new client that hired our firm. He said, Brian, I've listened to your TV and radio show for years. He said, what's interesting is my portfolio was down more than the market, and when the market came up this year, I'm down half as much as the market went up. He said, that's why I'm moving to your firm. I realize the person that I'm utilizing is basically doing this concentrated stock portfolio that you described as overly risky, overly volatile, which really takes away from net returns. So again, how is your money really being managed, and what are you ultimately buying in your portfolio, and does it make sense? Taking more risk than the market, making less returns than the market is a losing proposition. Steady Eddie wins the race, and sometimes you have to realize that you have to make adjustments to that portfolio in order to secure your retirement and create long-term growth and income for a retirement portfolio. If you're not a client of our firm, give us a call. We'd love to help you. Our minimum client size is $500,000 and up. That will be raised at the end of the year to $1 million as we're going back to our old client minimum now that things are recouping a little bit in the overall markets and the economy. So if you want to become a client of our firm, give the office a call, talk to my staff. We'd love to help you. As always, have a safe and profitable day.